Hey everyone, welcome back to Corporate Decoder. Today, Standard BioTools Lab just filed an 8K announcing they have regained compliance with Nasdaq listing rules, and this is a big deal especially given their recent merger news. Quick note, this is not financial advice, just my take on public filings for educational purposes. After facing the threat of delisting, Standard BioTools has dodged a bullet, but the path forward still has significant hurdles. We are looking at an 8K filing from Standard BioTools Incorporated, dated the 5th of June 2026. This is a current report, and the key event here is that the company received a letter from Nasdaq saying they are back in compliance with the minimum bid price requirement. The event the report is about happened on the 5th of June 2026. This means that on this day, Standard BioTools got the good news from Nasdaq. The company in question is Standard BioTools Incorporated, which you might know by its stock ticker lab. This filing is particularly important because it concerns their listing on the Nasdaq Global Select Market, which is a pretty high-tier exchange. Let us dive into what this means. Nasdaq has a rule, specifically Rule 5450 subsection A, paragraph 1. This rule basically says that the stock price needs to stay above a certain level, in this case $1, for a sustained period to remain listed. Earlier this year, on the 20th of April to be precise, Standard BioTools received a notice from Nasdaq stating that their stock price had fallen below this $1 threshold for 30 consecutive business days. This put them in danger of being delisted, meaning lab shares would no longer be traded on Nasdaq. Imagine if a company like Bed Bath & Beyond, which struggled with its stock price, got delisted. That is a serious blow to investor confidence and liquidity. But now, the good news is they have officially regained compliance. This means their stock price has been at or above $1 for long enough, according to Nasdaq's rules. This is a huge relief for the company and its shareholders. Think about it like this: if you are at risk of losing your driver's license, and then you get that notice saying your record is clean again. Now, why is this happening now? Looking at the bigger picture, Standard BioTools is actually in the middle of a massive deal. Just days after this filing, on the 8th of June, news broke that Standard BioTools is set to merge with another company called Treeline in an all-stock deal. This merger is valued at a whopping $2.5 billion. This merger is a huge event, and it likely played a significant role in the company's efforts to regain Nasdaq compliance. Companies often work hard to meet listing requirements when they are involved in major transactions like this, because being delisted could jeopardize the entire deal. However, it is important to note that even with this positive news, Standard BioTools has had a rough time lately. Yahoo Finance reported in January that shareholders have endured a 76% loss over the past 5 years. That is a pretty steep decline, and it highlights the challenges the company has been facing. The current market capitalization is around $347 million, with the stock trading around 80 cents. This means that even though they just got back above the $1 threshold, the stock price is still quite low, reflecting those past struggles and perhaps ongoing investor concerns. Now, about this merger with Treeline, it is an all-stock deal. This means that Standard BioTools is not necessarily using cash to buy Treeline, but rather exchanging shares of their own company for shares of Treeline. The $2.5 billion valuation is for Treeline. This suggests that Treeline is seen as a valuable asset, and this merger is a strategic move to either grow the combined company, enter new markets, or achieve some sort of synergy. Some of the top institutional holders in Standard BioTools include Caston Capital with over 22% and Viking Global Investors with 15%. These are significant stakes, meaning these large investors have a vested interest in the company's success, especially with this upcoming merger and the recent compliance news. So, what is the story here? Standard BioTools was teetering on the edge of being kicked off Nasdaq. They managed to pull their stock price back up, likely in anticipation of or support for this major merger with Treeline. The merger itself, valued at $2.5 billion, seems to be the company's big play for the future. However, we cannot ignore the past 5 years of shareholder losses and the current low stock price. Regaining compliance is a short-term win, a necessary step to keep the merger on track. The real test will be the success of the combined company post. Merger, will they be able to deliver value to shareholders and maintain a healthy stock price moving forward? Looking at the bigger picture, this situation is not entirely uncommon. Companies that struggle with their stock price often face delisting threats. Sometimes a significant event like a merger can provide the catalyst to turn things around, but it is not a guarantee. We need to watch how this merger plays out and whether the new combined entity can truly deliver on its promise. The risk I am watching is whether this merger can truly revitalize Standard BioTools and lead to sustainable growth, or if it is just a way to avoid delisting without addressing the underlying business challenges. My biggest concern is that past performance is a strong indicator of future results, and while the merger is exciting, The company's historical struggles cannot be simply erased. What I am actually looking for is evidence of improved financial performance and market position for the combined entity in the coming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord in the description.